Thank you so much for joining us on this journey. We hope you learned something new, found some practical tips you can use, and maybe even feel a little more inspired to take control of your finances. Remember, keep learning, keep growing, and keep building that financial fortress. Ready to dive deep into personal finance?
Always ready.
Today, we're going through 10 most important things you must know about money. And like we always say,
It's more than just, basic budgeting.
way more. We're going to be talking about building a real solid foundation for your finances.
That's right. A foundation that'll help you make those really smart money choices,
For sure. So get ready, because this is about to get super practical.
Yeah, I think it's interesting how personal finances really affect in every single part of our lives.
Absolutely.
But so many people just, I don't know, feel kind of lost when it comes to money.
Totally.
So this whole deep dive thing, it's all about giving you the tools and confidence to, build a secure financial future.
Love it. Okay, so let's start building.
Right.
Where do we begin?
All right.
What about this whole eighth wonder of the world thing?
Oh, compound interest.
Yeah, compound interest. You hear it all the time.
Right.
But I'll be honest, I'm not sure I totally get what makes it so magical.
Well, it all comes down to time and this thing called exponential growth.
Exponential growth. Okay.
Imagine you invest $1,000 today,
Okay.
and let's say you get a 5% annual return.
Okay. Not bad.
After a year, you've made $50 in interest. Right.
Yeah.
$50, not bad. But here's where the magic happens. In year 2, you're earning 5%. Not just on your original 1,000, but also on that $50 you already earned.
Oh, I see.
So year after year, you're basically earning interest on your interest. It's like a snowball.
It keeps getting bigger. Okay, so it's not just about earning a little extra every year.
Right.
It's about that extra also earning a little extra.
Yes.
I'm starting to see the magic here.
Yeah, so after 10 years, that initial $1,000 could be over $1,600.
Wow.
And then after 20 years, could be worth over $2,600.
Yeah.
That's how powerful it is to just let your money do the work.
So you're saying it's really important to start investing early, even if you don't have a ton of money to put in?
Absolutely. Time is your best friend when it comes to compound interest.
Time is on our side.
Small investments, even if they're consistent, they can really pay off over time.
So instead of waiting till I'm a millionaire to start investing,
Yes.
I could just set aside a little bit every month?
You got it. Look into things like low-cost index funds, or maybe use a robo-advisor to get started.
Robo-advisor. Okay, I'll check it out.
Yeah, there's so many options out there these days.
So we've got time on our side, but there's another big thing we got to think about. Inflation.
Ugh, inflation.
Right. I love that analogy you used before.
A tire.
Yeah, like a slow leak in your tire. It can really deflate your buying power over time.
Right. It's sneaky, right?
Yeah.
Like that $100 bill you have, it still can say $100, but what you can actually buy with it just shrinks as everything gets more expensive.
I feel that. Like that cup of coffee we were talking about
Right.
before.
It's
10 years ago, it was $2. Now it's $4 or $5.
Right. Inflation at work.
So how do we fight back against this?
Well, the key is to make sure your money's growing at least as fast as inflation, ideally even faster.
Okay.
Which is usually, around 2-3% each year.
Okay. So we need to make sure our investments are making more than that, 2-3%?
Exactly. You got to find investments that can outpace inflation, or else your money's just sitting there, not doing much.
It's like running in place, right? You're putting in the effort, but going nowhere.
Exactly. And that brings us to something else important, lifestyle inflation. The more money you make, the more tempting it is to just, spend more.
Oh, for sure. You get a raise,
Yeah.
and suddenly you just need that fancier car or a bigger apartment or a luxury vacation.
It's easy to fall into, right?
Exactly.
But it's not always the best thing for our wallets, is it?
Not always. It's how do we enjoy the good stuff without going overboard?
Right. I mean, enjoying life is important, but you got to be smart about it. Think, are these upgrades actually adding value, or are they just keeping me stuck on this spending treadmill?
Spending treadmill, good one. So maybe set aside some money for savings before I even think about spending.
Exactly. Maybe put a portion of each raise directly into savings before you can spend it.
Pay yourself first. I love that. Okay, now on to something that a lot of people get stressed about. Debt.
Oh, debt.
It feels like a bad word, but I know it's not always a bad thing, right?
Right. You got to know the difference between good debt and bad debt.
So a mortgage for a house or a student loan for a good degree. Those are good, right?
Usually, yeah.
Yeah.
They're usually good debts.
Because they're helping you build something for the future.
Exactly. They often come with lower interest rates, too.
Right.
And they help you get things that actually grow in value over time. But then there's high interest debt, credit cards. That's where things get tricky.
Okay, unpack that for me. What makes credit cards so risky?
Those interest rates, they're brutal. Imagine you owe $5,000 on a card with a 20% interest rate.
20%. Oof.
If you're only making the minimum payments, you could end up paying like over $11,000 just in interest.
Seriously?
It can take you like forever to climb out of that hole.
That is scary.
Yeah, it's a real trap. So what do you do if you're already in that situation?
Right. What do you do?
First step, you got to make a plan to tackle those high interest debts, like as fast as you can.
Okay.
Maybe look into like debt consolidation or balance transfers to try and lower the interest you're paying.
Okay.
And the most important thing, don't take on any more high interest debt while you're paying off what you already owe.
Easier said than done, I'm sure, but definitely worth it to get out of that cycle.
Absolutely. And speaking of protecting yourself financially,
Yeah.
one of the best things you can do is build a solid emergency fund, like a safety net, right?
So if like you lose your job or have a medical emergency,
Right, where your car breaks down.
you have that cushion.
Exactly. Ideally, your emergency fund should be enough to cover like 3 to 6 months of your living expenses.
Okay, so how do you recommend actually building that up?
Yeah.
Because especially if you're living paycheck to paycheck, it can feel impossible.
Yeah, for sure. But it's all about starting small. Even if it's just $20, $50 a week, it adds up.
Consistency is key, right?
Exactly. Like, think about it. If you gave up that daily latte, how much could you save each month?
That's true. It's about finding those small, manageable ways to save.
Mm-hmm.
And speaking of manageable, budgeting. I know people hear budget and they think,
Oh, restrictive.
right, deprivation.
Exactly.
But that's not really what it's about, is it?
No. Budgeting is all about empowering yourself.
Yeah.
It's like a financial roadmap, you know?
So it's less about saying no to everything
Yeah.
and more about like making conscious decisions about where your money goes.
Exactly. Like with a good budget, you can track how much you're earning, allocate money for your essential expenses, like rent, food, transportation,
Yeah.
and then decide what to do with the rest.
So if I want to prioritize travel this year,
Yes,
I can make sure I'm setting aside money for that.
exactly. It gives you the power to make choices.
Yeah.
And there are all these apps and tools now to make budgeting super easy.
Yeah. You can track everything. You can automate stuff. It's way easier than it used to be.
For sure. Find a system that works for you. That's the important part.
Okay, so we talked about saving. We've talked about budgeting. Now let's talk investing. The golden rule here, diversification.
Don't put all your eggs in one basket.
Right. That classic saying.
Yeah.
But in terms of investing, what does that actually look like?
So it's all about spreading your investments across different, what we call asset classes,
Okay.
to lower your risk and make your portfolio more stable over the long haul.
So not just different types of investments.
Right.
But different industries, maybe different countries even?
Exactly. Like you want a balanced portfolio. So if one sector takes a hit,
Uh-huh.
the others can kind of balance it out.
It's like a balanced diet, right? You don't want to just eat like one food all the time.
Perfect analogy.
So we're starting to see how all these pieces fit together to build that solid foundation.
Yeah.
But investing can feel really intimidating, especially if you're just getting started. Where do we even begin?
The best thing you can do is educate yourself.
Okay.
The more you understand about all the options, about risk, about how to build a portfolio, the more confident you'll be making decisions.
That makes sense.
There are tons of resources out there, books, websites, even podcasts.
We'll be sure to share some of our favorites at the end.
Perfect.
But speaking of the long term, retirement.
Ah, yes, retirement.
I know. It might feel like forever away.
Right.
Especially if you're just starting out in your career.
Right.
But we talked about compound interest earlier, right?
Right.
That plays a huge role in building a nest egg for retirement.
It really does.
Yeah.
The earlier you start, even if it's small amounts,
Okay.
the more time your money has to grow. Don't underestimate that.
Oh, so even if I can only save a tiny bit every month, it's still worth doing.
Absolutely. It's all about building that habit.
And then we have those retirement savings plans, right?
Oh, yes. Like 401ks and IRAs.
Okay.
So a 401k is usually offered through your employer.
Right.
And a lot of times, they'll even match a portion of what you contribute.
So that's like free money.
Basically, yeah.
Awesome. And what about IRAs?
IRAs are individual retirement accounts.
Okay.
And they give you a little more control over how you invest.
Gotcha.
We could probably do a whole separate deep dive just on retirement planning.
Yes, for another time.
But the key thing is start early, take advantage of any matches your employer offers, and choose investments that fit your risk tolerance.
Got it. Start early, stay consistent. But, life happens. Things change. Like, what if my goals change? Do I have to stick to the same financial plan forever?
That's a great question. It's important to be flexible, to adjust your goals as needed. Life's always changing.
For sure.
Maybe you decide you want to travel instead of buying a house.
Hmm.
Or maybe you have an unexpected expense.
Totally.
It's okay to adjust. What matters is that you're making conscious choices.
So be adaptable. Got it. But even with a good plan and a positive mindset, there's one thing we haven't talked about directly.
What's that?
The emotional side of money.
Oh, right. That's a big one. Money's not just about numbers, right?
Yeah.
It's tied to our feelings, to our security, to our values.
Absolutely. I know, like for me, even talking about money can be kind of stressful,
Yeah.
especially when I compare myself to other people.
Yeah, that's really common. Our relationship with money, it can be really complicated.
Yeah.
It's affected by, like, our past experiences, our family, what we see in society.
Sure.
Like, for some people, money equals power, freedom, security.
Right.
But for others, it might make them feel anxious, guilty, even scared.
It's true. And those feelings can really affect the way we handle money.
Absolutely. They can lead to impulsive decisions or bad spending habits.
Totally.
Right.
So how do we build a healthier relationship with money?
Well, the first step is awareness.
Okay.
Like, what are your triggers? What situations or thoughts make you feel strong emotions about money?
Okay, so like seeing a big credit card bill
Uh-huh.
or like comparing my salary to my friends.
Exactly. Once you know what your triggers are,
Yeah.
you can figure out how to manage those feelings in a healthy way.
Okay.
Maybe try some mindfulness stuff, like meditation, or talk to a therapist or a financial counselor,
Okay.
and even just taking a pause before you make a big financial decision.
So if I'm feeling overwhelmed, take a deep breath.
Exactly. Go for a walk, talk to a friend. Don't make any rash decisions.
That's good advice. Create space between the emotion and the action.
Exactly.
And it's okay to ask for help.
Absolutely. There are so many resources out there to help you, both practically and emotionally.
We're not alone on this journey. Okay, so we covered a lot in this first part of our deep dive.
We did.
From compound interest to diversification to building a healthy money mindset.
Personal finance.
Yeah.
It's not just about numbers and spreadsheets, right?
No.
It's about understanding yourself,
your values,
your goal.
and building a life that matches those things.
Exactly. It's about making good choices.
Taking control of your finances.
And remember, it's a journey. There's always more to learn.
Absolutely.
We're back. It's kind of cool how all this stuff we talked about in part one, it all connects.
It really does. Like building a house, you need that strong foundation, but then you got to add the walls, the roof.
Right.
Everything works together.
Exactly. Like understanding compound interest, that can really get you motivated to start saving and investing early on.
Great.
And then that can help you, deal with inflation.
And if you've got that emergency fund, you don't have to panic and go into debt when something unexpected happens.
Right.
Which keeps your budget and your savings goals on track. It's like a chain reaction.
Totally. A well-planned budget can help you pay down any high-interest debt you might have and also put money towards those long-term savings goals and investments.
Makes sense. Everything's working together to get you closer to, financial security.
Exactly.
Okay, so let's keep building on that system. Next up, a topic that can be kind of scary. Taxes.
Ugh, taxes.
Right. It can feel like, I don't know, just handing over a bunch of your money. But there's got to be more to it than that.
There is. I mean, taxes are how we pay for all those important things.
Like what?
Infrastructure, education, healthcare.
Okay, yeah.
It's how we keep society running. And if you understand how taxes work, you can actually make smarter decisions with your money.
That's interesting. But where do we even begin? I mean, there are so many different types of taxes.
Oh, yeah. It can feel overwhelming, for sure. Income tax, property tax, sales tax.
Right. It's a lot.
The key is to focus on the ones that are most relevant to you. For most people, that's going to be income tax.
Income tax. So that's the tax on, like, our paychecks.
Exactly. Your earnings from your job, investments, anything like that.
So the amount we pay depends on how much we make and our filing status.
Exactly. In the U.S., we have something called progressive tax brackets.
Okay.
Which basically means the more you earn, the higher the tax rate you pay on, a portion of your income.
So it's not like everyone pays the same percentage?
Nope, not at all. Think of it like this. Let's say someone makes $50,000 a year.
Okay.
They're not going to pay the same rate on all of that. Part of it might be taxed at 10%, another part at 12%, and so on. The exact brackets and rates can change each year.
So it's kind of complicated.
It can be, yeah. But the main idea is the same. The more you make, the higher the rate on some of your income.
Got it.
Yeah.
So even if we're not doing our own taxes, it's helpful to have a basic understanding of how it works.
Absolutely. It helps you make better choices throughout the year, like when you're choosing between different retirement accounts or investments.
Okay, that makes sense. Speaking of investments, let's go back to diversification for a minute.
All right, back to those baskets.
Yeah. We talked about not putting all our eggs in one basket, but what kinds of baskets are we actually talking about?
Good question. Let's break it down. We've got stocks,
Stocks, okay.
which are basically little pieces of ownership in companies that are publicly traded. Stocks have the potential to grow a lot,
Uh-huh.
but
Yeah.
they also come with higher risk.
Higher risk, higher reward.
Right. And then we have bonds.
Bonds, those are the loans we make to governments or
Right.
companies, right?
Yeah, got it.
Yeah.
They generally offer lower returns than stocks,
Right?
but they're also lower risk. It's all about finding that balance.
Gotcha. And then there's real estate.
Real estate. That one's interesting.
Yeah, it's a whole different world, isn't it?
It is. With real estate, you can get rental income and also the potential for the property to go up in value over time.
Right, appreciation.
Exactly. Real estate can be a great way to diversify, but you need a decent amount of money to get started.
And it comes with its own set of risks and things you have to deal with.
For sure. And then beyond those more traditional asset classes, there are things called alternative investments.
Alternative investments, what are those?
Things like commodities, precious metals, even cryptocurrencies.
Commodities, like oil and gold.
Exactly. Commodities are raw materials or agricultural products you can buy and sell. Precious metals like gold and silver, those are often seen as a hedge against inflation.
Okay.
And then you have cryptocurrencies like Bitcoin and Ethereum. They're digital assets known for their volatility. The prices can swing up and down like crazy.
Sounds like there are a ton of options out there.
There are. It can be overwhelming for sure. And that's where financial literacy comes in and why talking to a professional like a financial advisor can be really helpful.
They can kind of help you navigate all the options.
Exactly. A good advisor will help you figure out how much risk you're comfortable with, what your goals are, and how much time you have to invest.
And they can put together a plan that's tailored to you.
Exactly.
But
It's about making informed decisions, not just following the latest trends or trying to time the market.
that makes sense. All right, so we talked about taxes and diversification, but now let's talk about something that feels a little closer to home. Our spending habits.
Spending habits. This is where personal finance gets really personal.
Because everyone's different, right?
Exactly. We all have our own unique spending patterns and things that trigger us to spend.
Like, some people are naturally savers, but others, like me, might struggle with impulse purchases.
It's all about figuring out what your own habits are so you can create a budget that actually works for you. One of the biggest things people struggle with is telling the difference between needs and wants.
Needs versus wants, yeah, that's a big one. And it's so easy to get sucked in by all the advertising, especially online.
It's true. We end up buying so much stuff that we don't actually need or even really want.
I know. So before you hit that buy button,
Yes.
take a minute to think, do I really need this? Is this actually going to make my life better?
I love that. Just taking a pause can save you so much money.
And another thing you can do is track your spending for a month or two. Really see where your money is going.
Oh, yeah. That can be eye-opening.
I did that once and realized I was spending way too much on eating out and subscriptions I barely used.
Exactly. Once you know where your money's going, you can start making changes. Cut back in some areas, make more conscious choices.
And then use that extra money for your savings goals or investments. It all comes full circle.
Exactly.
Hmm.
All right, let's shift gears a bit and talk about something that doesn't get talked about enough. Your mindset.
Mindset. You mean like how we think about money?
Exactly. Our mindset can really affect how successful we are with our finances.
So if you have a negative mindset, like you think you'll never be wealthy or that money is bad, that can actually hurt you financially.
It can become a self-fulfilling prophecy, for sure. But if you work on having a positive and abundant mindset about money,
Okay.
it can open up so many possibilities. You might start attracting more wealth and opportunities.
So it's like the law of attraction for money.
Kind of, yeah. If you believe you can manage money well and create abundance,
Yeah.
you're more likely to make choices that support that belief.
So how do we actually change our mindset about money? It sounds kind of, I don't know, vague.
It's more practical than you might think.
Mm.
Start by figuring out what you currently believe about money. What messages have you picked up from your family, from society, from your own past experiences?
It's like uncovering those hidden beliefs that are running the show in the background.
Exactly. Once you identify those limiting beliefs, you can start challenging them and replacing them with more empowering ones.
So instead of saying, I'll never be able to afford that,
Uh-huh.
maybe I say, I'm learning how to manage my money so I can achieve my goals, including that one.
Perfect. It's about shifting your language and your perspective. Surround yourself with positive influences, read books, or listen to podcasts about financial literacy and abundance,
Okay.
and practice gratitude for the financial resources you already have.
That's a good point. We tend to focus on what we don't have and forget to appreciate what we do have.
Exactly. Remember, changing your mindset takes time and effort. It's a journey, not a destination.
But it's worth it.
Absolutely. A positive mindset can open up so many financial possibilities.
I love that. Okay, so we talked about taxes, diversification, the power of our mindset. But before we move on, there's one more thing I want to talk about, and it can be a little uncomfortable talking about money.
Oh yeah, money conversations. They can be tricky.
But you're saying they're important.
They are. Being open and honest about money is so important for healthy relationships.
Whether it's with your partner, your family, or even at work.
Exactly. If you avoid those conversations, it can lead to misunderstandings, resentment, even conflict down the road.
That makes sense. But how do we even start those conversations, especially when money can be such a sensitive topic?
Well, the first thing is to pick the right time and place. Don't bring up tough financial stuff when you're already stressed or arguing.
So like not during dinner or right before bed.
Right. Find a time when you can both relax and really listen to each other. And be mindful of how you're talking. Approach the conversation with empathy and understanding, even if you don't see eye to eye on everything.
So it's not about winning the argument.
No, not at all. It's about working together towards shared financial goals.
Finding that common ground.
Exactly. And it's okay to disagree. The goal isn't always to agree on every single thing, but to understand each other's point of view and find solutions that work for both of you.
Okay, so compromise.
Exactly. And sometimes it can be helpful to bring in someone neutral, like a therapist or a financial counselor.
They can kind of mediate the conversation.
Exactly. They can provide a safe space to have those tough conversations.
Okay, so to recap this second part of our deep dive, we covered taxes, diversification, the power of our money mindset, and the importance of talking about money openly and honestly.
We learned that personal finance is so much more than just numbers.
It's about knowing yourself, your values, your goals.
And creating a financial life that reflects who you are.
It's about taking control of your finances and making choices that feel good for you, both personally and in your relationships.
Absolutely. And remember, financial literacy is a journey.
Always learning.
There's always something new to discover.
All right, welcome back to the final stretch of our personal finance deep dive.
The home stretch.
We've covered a ton of info, from the magic of compound interest to the importance of diversification.
That's a great stuff.
But now it's time to talk about putting all this knowledge into action.
You got it. Time to make it real.
And a great way to do that, I think, is by setting some financial goals.
Absolutely. Goals give you direction, something to aim for.
It's like having a map when you're on a journey.
Exactly. Without goals, it's easy to just feel lost or get overwhelmed, especially with something as big as personal finance.
So how do we even start setting financial goals? Where do we begin?
Well, a good starting point is to think about your goals in two categories, short-term and long-term.
Short-term and long-term. Okay.
Short-term goals are things you want to achieve in, like, the next year or two.
So things like paying off a credit card, building up my emergency fund, maybe saving for a down payment on a car or even a house.
Exactly. Those short-term goals, they give you that sense of accomplishment, keep you motivated.
Keep the momentum going.
Right. And then you have your long-term goals, which are more, big picture.
The big dreams.
Yeah. Things that take more time to achieve.
Yeah.
Saving for retirement, maybe funding your kids' education, or even reaching financial independence.
Financial independence, that's a big one.
It is. There's a whole movement around that, FIRE, financial independence, retire early.
FIRE. I've heard of that.
It's pretty cool.
Yeah.
But whether you're talking short-term or long-term goals,
Yeah.
the key is to make them specific.
So not just like save more money.
Right. That's too vague.
Yeah.
You want to make your goals smart, specific, measurable, achievable, relevant, and time-bound.
I love a good acronym. Okay, so instead of save more money, a smart goal would be something like save $5,000 for a down payment on a house in the next 2 years.
Perfect. That's specific. You can measure it. It's achievable. It matters to you. And it has a deadline.
I can see how that would make it feel less overwhelming.
It does. And even with a SMART goal, it can still seem like a lot. So what you want to do is break it down into smaller steps.
Smaller, more manageable steps.
Exactly. So if your goal is to save $5,000 in 2 years,
Mm-hmm.
figure out how much you need to save each month.
Okay, so let's see, that's about $208.10 per month. That feels a lot easier than $5,000 all at once.
Exactly. And you can even automate it, set up an automatic transfer from your checking to savings each month.
Oh, yeah, so you don't even have to think about it.
Out of sight, out of mind. And for those bigger long-term goals like retirement, we talked about 401ks and IRAs.
Right, the retirement savings plans.
Yeah. So your 401k, that's usually through your work, and sometimes your employer will even match some of your contributions.
It's like free money.
It really is.
Yeah.
And then you have IRAs, individual retirement accounts, which give you more control over your investments. We could talk about retirement planning all day.
Yeah, that's a whole other deep dive.
But the main thing is start early. Take advantage of any matching your employer offers and choose investments that you feel good about.
Okay, start early, stay consistent. Got it. But what about when life throws us a curveball? Like, what if our circumstances change or our priorities shift? Do we have to stick to our goals no matter what?
That's a really good point. It's important to be flexible, to adjust your goals as you need to.
Life is always changing, right?
Exactly. Maybe you decide you want to travel the world instead of buying a house. Or maybe you have a big unexpected expense that sets you back a bit.
It happens.
It's totally fine to adjust. What matters is that you're making conscious choices and that your financial plan still supports your overall values and what you want to achieve in life.
So it's more about being adaptable than being perfect.
Exactly.
That makes me feel better. But even with a good plan and a positive mindset, there's this whole other side of personal finance that we haven't really talked about directly. The emotional side of it all.
Oh yeah, the feelings.
Money can be really emotional.
It can. It's tied to our sense of security, our worth, all that stuff.
It's true. Like, for me, talking about money can trigger anxiety, even shame sometimes,
Yeah,
especially when I'm comparing myself to other people.
it's really common. Our relationship with money is complex. It's affected by our upbringing, our experiences, what we see around us.
Totally.
For some people, money represents freedom, security, power. For others, it might be associated with stress, guilt, even fear.
And those emotions can really affect the decisions we make with our money.
Absolutely. They can lead us to overspend, make impulsive choices, sabotage our own progress.
So how do we get better at managing those emotions? How do we become like emotionally intelligent about money?
Well, it starts with awareness. What are your triggers?
Yeah.
What situations or thoughts make you feel strong emotions about money?
Like we talked about before, right? Seeing a big credit card bill or comparing salaries with friends.
Exactly. And once you know what your triggers are, you can start to develop healthy coping mechanisms.
Like taking a break, going for a walk, talking to someone I trust.
Exactly. It's about creating that space between the emotion and the action. Give yourself time to think things through before you do anything rash.
And it's okay to ask for help, right?
Of course, there are so many people and resources out there to support you on your financial journey.
We're not alone.
So, as we wrap up this deep dive into personal finance, I want to leave you with this thought. Personal finance is a journey, not a destination. It's about constantly learning, adapting, and growing.
It's not about being perfect. It's about making informed choices that feel right for you.
Exactly. It's about aligning your money with your values and goals and creating a life that truly reflects who you are.
I love that.